Good morning, everyone. Welcome to Admiral Markets. Welcome to the Forex trading room. We're going to take a look at the Forex market and the charts, of course, together here in this 1.5 hour session. So, first of all, before we do that, though, let me show you this PowerPoint. I just need to do it a bit differently here. Good. Now we have full screen. First of all, the risk disclaimer, of course, explaining that trading for exchange and the global financial markets is considered high risk and may not be suitable for all investors. Please seek advice of an independent financial advisor for more information on that. And this webinar is for educational purposes only. So thank you for your attention on that. Goody good. Today we're going to be taking a look at oscillator trading. In fact, thought that I see that somebody might have a dark screen. Let me check the chat and see if, first of all, I can't find it. Not someone else is saying as well. Two confirmations that can't see the screen. Okay, so let me try to move it to another part of the screen. 1 second. Just give me a second. There we go. Or almost. You see it? No, you don't see the PowerPoint right now. Not yet. Let me see. What is going on here? Now you do. Or almost do, I think. Let me just check. What do you see now? Do you see the PowerPoint? There are blue spots. That is strange. Let me try it again. That is very weird. I am trading from a different location with a different external screen because I went back to the home country for Christmas, but I wouldn't think that the external screen would cause this necessarily. Let me try to, sorry about this delay, let me try to, no, that's really blocking indeed. Sorry about that for this delay. I know that's annoying. It's annoying me as well, but trying to figure out what the solution is. If we find it, I'll let you know. And thanks, Rachel, and all the others for your answers so far. I'm trying to find a solution for that screen blocking. I don't know if there is a solution, but maybe it's something that we'll have to fix with the IT people. Let me try to show both screens, maybe? Maybe that's the solution. No. Then you just see the black screen and something is blocking it, but there's nothing blocking it. That's the problem. There's nothing really on my chart that could block it. It's only for your vision blocked, but not for my side. Let's see. Black on the left charts. Now it's totally black, right? Charts under blue blocks. Yes. Problem is, well, I can try that, but the problem is the. Let's see. Let me try it. Try to move the charts. That doesn't help. 1 second. See, I can move the charts, but that's not going to help because all we then see, those spots are remaining there, unfortunately. I can move them to the right, but those spots just stay where they are. And the only thing that becomes visible is that. Yeah, I will try that, Graham. That's actually a great idea. Probably at the moment I don't see any other solution than that. I will just see if the rebooting might help. So if you want, stick around. I'll be back in a minute. It shouldn't be too long. All right. So thanks. I'll be back in a second. Let me see if I can write a message for those of you who come later. Okay, I'll check the sound then as well. Thanks, Beer. So I left a message. Oh, but the message is only to the organizer. 1 second. Good. We'll be back in a few minutes.
Alrighty, good. It's a bit awkward for me because my screen is kind of like over two screens, but I can make it maybe a bit smaller so that for me it would be more logical. Otherwise, it would be a bit smaller for you with the right box, blue box on the right, but at least it's just one integral thing, at least. So that's good. Alrighty, let me start this PowerPoint quickly. I just want to show you the risk disclaimer that wasn't visible earlier on. So once again, thanks for all your patience and glad to be back. This risk disclaimer, of course, we explained that trading for exchange is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational purposes only. So now you can see the disclaimer there. We'll be taking a look at oscillator trading this time. So finally, we can move on to the charts. First of all, though, we'll take a quick look at the calendar, I think we have the Bank of England governor speaking today. And tomorrow, of course, we have FOMC, and the market already is moving quite slowish. I wouldn't be surprised if of course, the market slows down because of that news event tomorrow. It'll be interesting to see if we get some tapering. I don't think so as yet, probably a bit too soon, but it's probably going to happen sooner rather than later in 2014, I would say. But just a humble guesstimate from my side. I'm not by far an expert on this from the tapering point of view. The pound has news event in 1 hour 20 minutes, and a big one, the CPI, but also smaller ones, as we can see, a whole big bunch of them, a whole list of them, in fact. Then we have the dollar core CPI, and I thought Bernanke was speaking today, but oh, here, Bank of England governor speaking. Sorry, there it is, and also the Bank of Australia speaking today. Good. Finally, charts. Wow, thought I would never see them. Finally do. Let's start with the euro dollar. Yesterday we had a bit of a breakout, but that didn't go all too far as expected. Couldn't break or punch through this 138, 138.30 zone, which was logical. That breakout trade didn't have much space before it bumps into and runs into major resistance of the daily chart and weekly chart. So right now we're just stuck in a consolidation on this 1 hour chart where we have a very good trend if you look at the 4 hour chart with a nice trend channel. But that trend channel, the trend is bumping into some major resistance on the daily chart. If we then zoom in, we see 138.30, of course, the daily top, and this year's high, as we've been saying last week as well for a while. And of course, if you zoom into the weekly chart, we might have a potential trend line indicated by this purple. That too is a resistance, of course, and could be a reason for currency to stop at that point. So yes, the euro dollar is an uptrend, but also it is right in front of resistance. Therefore, we could expect a reversal potentially, or a lot of choppiness. That choppiness will probably see a breakout to one way or another. It could break to the downside. That would be a reversal scenario. It could break to the upside. That would be then a with the trend scenario on the 4 hour chart, but then it would also be a breakout on the weekly, up to the magenta line probably. So we're at a break or bounce spot, to put it simple. Break or bounce. Bounce off the purple or break the purple up to magenta. A bounce off purple, we could see price maybe challenge, for example, the blue line I have here, or even the green line all the way at the bottom. So those are, it's an interesting spot. With Christmas coming close and FOMC, it's not going to be easy to trade anything of that, because first of all, FOMC, we should probably see quietness before that. Then we should see some volatility spikes, and then we'll probably see quietness as we approach the holidays. And our trading sessions on the 24th and 31st are definitely not focused on intraday trading, but they will be more focused on, or primarily only focused, in fact, on looking at just long-term charts and doing some homework for next year. And really, because normally speaking, there shouldn't be any movement on the 24th, or hardly, yeah, no, not at all. And the 31st could be a bit. But if you'd like to join me then, I would gladly see you on those days as we prepare, or I prepare together with you for the 2014. But that's going to be difficult to trade, although the yen last year did have a lot of trending moves during the holiday season, in fact. Probably because the Bank of Japan saw the lack of liquidity as a good opportunity to move the yen and its further weakness. But so we can take a look at the yen. Maybe that will be easier to capitalize. But it is at an interesting bounce or break spot. We can still look at different things, though, like the oscillators, because this is an oscillator trading webinar perspective. Good. Well, the AO is moving up, but I want to definitely also add the CCI. Tarantula was explaining the CCI last week Thursday. He also explained the MACD and the RSI, and it was interesting to hear him speak about the CCI. Personally, I never used it that often, and it actually got intrigued by him. So I would say let's put on the CCI, and I have always the AO. As you know, I don't use the MACD, but we could even add maybe, for example, the accelerator. See what these three have to tell us. Well, Awesome Oscillator is actually trending up. We saw a bit of a dip here, moving up on the weekly. The CCI seems to be in an overbought level at the moment. There was some divergence here on the CCI as well, and that's when price went moved down, of course. But we can see also that the CCI stayed pretty high above, pretty long above the 100 in this zone. It really took long before it really moved down lower. So that could happen here too. So would not hold my breath for a reversal right here necessarily based on that, but could be an indication that sooner or later, maybe after this up move, the retrace could be in the cards, for example. Wayfo is also saying that the SNB could do the same, the Swiss National Bank, to push the currencies and weaken the Swissy, for example, over the holidays. Could definitely be it. It would make sense from my perspective. I think it's probably one of the easiest times to do so, I would say, indeed. Let's take a look at this daily. The daily is in a way retracing a bit, but often enough we see one more bump up here before we move down. We don't have really divergence between these tops as well if you look from the daily perspective here. So I wouldn't be surprised to see one more push up to break this top looking at this CCI and the oscillator. We are in an uptrend. We're just very close to resistance. That's why it's not easy for price to continue. 4-hour chart. If you look at the 4-hour chart, it had a strong AO reading here, relative decent AO reading, and we see that we broke above the 4-hour resistance spot. If you look at that, that is actually an AO setup of mine. Break of that level with the stop loss below this level, and there's an 80% chance of at least reaching 1-to-1. That is a 60 pipper, so we should get to 138.30 at least. There's an 80% chance of getting there. Then there's a 60% chance of getting to 139.10 from my backtesting. Doesn't have to necessarily, of course, be true in the future, but that's what historical results have showed. And that doesn't surprise me from the trend perspective. Could easily continue that push. So any dips probably will see upside continuation, or there's a good chance of that. Good. This is the 1-hour chart again. We had some downside here. That is something that was looking at could happen because of this head and shoulders here, and was thinking that right in here, but it didn't go as far as I thought. At least I thought to the bottom of the uptrend channel. That didn't even happen. So relatively corrective price action. We can see this bull flag break, hook back so far. Let's zoom in a bit more. It looks like the oscillator is getting back to the zero line here. Once it has done that, this retracement is probably finished. And from the 4-hour perspective, there's that chance to go up. So we should find support probably anywhere along this trend line, for example, potentially. Or if not the trend line here, this magenta, let me make it a bit different color. If not this purple trend line, then probably at least above this bottom, most likely. If that bottom breaks though, then probably a bigger reversal is on the way, and the long-term resistance is holding and has turned this trend, has basically stopped this trend for continuing. We're still in the uptrend channel though, so even if we break the red line, there could still be a bounce from the blue line. So there's a lot of support layers that price would have to break through for really an entire reversal to the downside. But at least above red, excuse me, or above purple, we should expect continuation eventually. But the question is how, because it could be very choppy. Especially with FMOC and such a clear daily, weekly resistances, that might be awfully difficult to trade and maybe not pleasant at all. So let's move on. Take a look at the pound. Pound has something similar in a way. Pound 2 has an uptrend, or had an uptrend in fact. Contrary to the euro, this actually broke out of the uptrend, but it's still above key support. 162.60, of course, is the broken level, the broken resistances here of those two tops that we had, double top. 162.60 is now potentially support, right? Once broken resistance could become support in the future. And if we then zoom into the 4-hour chart, you can see the price stopped at that level. So that could be a bouncing spot for more upside, and price could go back into the uptrend channel when we break above the dark blue line here. And we can see with the trend breakout continuation, that in fact could be a break, pullback, continue scenario. The break is of a weekly trend line, which is the dark blue one. I'll take this one and make it a different color. 1 second. The dark blue line there is the weekly trend line. The green line was the weekly resistance, now becoming maybe support. So that whole area could become support as a bouncing spot for more pound upside to challenge, for example, this top right in here, which is at 167.60. So price could go up to 165, 166, anywhere in between now and that level. There's a potential for price to go up. All right, this was, let me draw this a bit better so that you can visualize it from this chart as well, because these tools are blocking too much price action. And if we zoom in, we can see that triangle on the weekly, first of all. And we're pushing through to the upside here. Now the 167.50 is therefore very important, because if that level were to break, this is actually a bullish triangle, not a bearish triangle. It could still be a bearish triangle despite this breakup, but the chances of that are becoming a bit less, but still 167.50 is the real key. Last week had a bearish weekly signal though. So that price action, 2 weeks of bearishness, definitely important. So if we do break last week's low, then I would say there's a good chance of continuing down to at least challenge this bottom or close to it. Despite the weekly correction though, weekly bearish price action, this could still be a correction and a hook back, as I said. So that could explain those particular price action signals. Let's take a look at the oscillator. Pound dollar is a bit oversold here on the CCI. Now CCI returning back over to minus 100 actually on this daily chart potentially. I'm not an expert in CCI. I know the oscillator, awesome oscillator, a lot better. But because it's an oscillator webinar, I still want to take a look and see if there's anything that makes sense. We see the CCI a bit in overbought, or at least that actually indicating maybe that that we could be in an uptrend on this 1 hour chart, slowly but surely. Rather than oversold, I would see it as more of a confirmation of a potential breakout to the upside if we do go above this this purple line. Right, the CCI is now back under 100, so that could be a breakout trade to the upside. This is relatively choppy price action, but considering the big support level right in here, if we do break above that trend line, we could see this unfolding to the upside where I have the green arrow. Here too though, the pound dollar definitely in a bounce or break spot, right? Bounce for trend continuation, or if we break, bigger retracement / reversal potential. Just like the euro dollar, although the difference of course with the euro is that it's still in an uptrend, and here it's hanging on the cliff basically, right? Cliffhanger. Is it still an uptrend or is it in a downtrend? 160 to 60 is very, in my opinion, very important. So here too, price at a very important level as well. Key level. Let's take a look at dollar yen. Dollar yen too, same story. That too at a key level and in a key trend. Very good trend to the upside, but approaching resistance, just like the euro dollar in fact. Euro dollar also an uptrend, approaching resistance. Dollar yen, same story. Dollar yen tried to poke through the 103.70 yearly high and top, did so only by about 20 pips, then reversed. So we don't have a sustainable break as yet. That is not a confirmed break. That is, if anything, a respect for that 103.70. We need a good close above that level with candles above it on the 4-hour, 1-hour chart, and then maybe a daily close above 103.70 or 103.90 now, to say that particular resistance has been broken. There was an attempt, but it failed, very simply put. And that's why in my wave count analysis, I was writing about a sustainable break with a good thrust, not this wishy-washy 15 pips through it and back underneath that level within an hour. If we go to the 15-minute chart, this is what sticks out of it. That's not enough. That was a respect, if anything, for that level. It was just a bit of an extension on the short-term time frames. That does not take away the fact, though, that on this 4-hour chart, we are in a very nice uptrend. So it's again a bounce or break spot. There are certain levels, though, of support that I think the price could easily still bounce, even if it were to break out of this uptrend channel. 102.13, 160, 101.10. Those same levels actually that we identified as a potential bouncing spot for this upside and this upside. And that too can happen again with those green arrows there on the chart. All three, in fact, have some potential. Now 101.10 is already quite deep, so I would say especially the higher two are definitely support areas. The third one is already becoming, I mean, if price were to get that low, one could doubt already about the uptrend potential necessarily, and then we could even think about the potential for the dollar yen, who knows indeed, as Wayfo says, to retrace all the way back to the retested triangle, for example. It's a very deep retracement, but one cannot exclude it. Probably be the max retracement possible. Otherwise, this is actually in a downtrend and reversing, maybe down to challenge 91 and 90, the 90 levels. So that would be, I would say, the kind of the max we could expect here, 99. But between 101 and 99, there could be some downside effect. Yep, it would be double top indeed. And it's certainly possible. You can't exclude it at the moment. No one can. No one can really know whether not or know or not know. No one really knows indeed. It could be double top, it couldn't. It's going to be very interesting. All we can do is wait for these levels and see how price reacts to them. If price still bounces above 101.60 and then pushes through them, then it's not double top. If we break below these green lines, especially the dark green lines, then it's looking like a double top, and indeed in that case we do have the potential to fall all the way back here. Be quite interesting to see that happen, because I don't think many, well, there's some who obviously would think that, but not many probably would think with this uptrend channel that it can go that low. Although there's certainly some who think that, or who believe that and are actually bent on this scene going down, for example. But it doesn't really make sense to have convictions, I think. To a certain degree, of course, having a certain vision about what a currency can do helps one's imagination about how to trade and where maybe to expect things. But to rigorously, I'm not saying that you do that way, I'm talking about other traders I know, by the way, but I'm sure you knew that. But other traders sometimes have a rigorous idea, like this has to be this or this. Dollar yen has to retrace to 90 to clear levels. They're talking about, to be honest, I don't think it even makes sense to be so stuck on a certain development. I'd just rather go with the flow and say if this level breaks, it's going to be an uptrend. If this breaks, it's probably going to do this. I think that makes more sense to spend one's energy on this stuff than trying to forecast too much or trying to be stuck on a forecast. But anyhow, that's that. So there is that monthly uptrend. Absolutely. Absolutely. That's a very good point. There's a big impulse, and there's nothing that we can deny from that. And therefore, if anything, indeed, the upside break was very logical, was a very good trade, made a lot of sense. The zero line had returned to the oscillator had returned to the zero line, which means that this triangle retrace was a good chart pattern correction, and this breakup was very nice. The only key level that still needs to be broken for that monthly uptrend to continue, as Vashna is saying, is that top. I mean, there's nothing we can do about it. It's very simple. That top needs to be broken before this uptrend, this monthly, weekly, daily uptrend can continue. There's nothing we can do about it. That's just a fact. Despite this tremendous impulse and the fact that we think because of that impulse it will continue, that's a very good thought, but still we need this red line to break, otherwise it might not happen. We don't know 100% for sure. The break from the break after the blue triangle break was definitely a good trade though. Right in here, right now, right as we speak, right with the monthly resistance that close, going long, of course, is less favorable from our R2R perspective than upon the break of the triangle, right? So So back to the daily. Very key, this level. Once it breaks, we should be in a good uptrend for at least a couple of 100 pips more, if not to a lot higher levels. Because if you put a fib on the monthly, in fact, let me just clean up this chart because I drew these lines, and if I keep them all time frames, then you won't be able to see them. If we, what I wanted to say is that if you put a fib on the monthly chart, you'll see targets at basically 110, 115, 120. That's how far it could go. And it could happen during Christmas, as it did last year. Good, sorry about that. So basically, if you put a fib on this upside, as I said, we bounce off the 38.2. If the 38.2 is not strong enough for this to move up and doesn't break the stop, then the next retracement fib is all the way at 50 potentially. Doesn't seem so likely, maybe, but in theory that is possible. I wouldn't hold my breath though for that, but minus 272 at 110. 120 minus 618. And from a monthly perspective, there's a top at 125, 124. And to be honest, the fact that we did push through the 103.70 did mean that we, from a monthly perspective, we do have a new high. So that is, you know, in a way a good sign for from the monthly time factor perspective. Weekly chart of Doji last week, right at the top here. So last week's low at 102 is going to be important, and the weekly low of that 101.50, and the weekly low of that before that 101.10. That's all support. Should bounce up there. Should continue if we move back that far. If not, we could see this, or potentially this. So it's bullish. It's just when and where. That's the only question. Wayfo is asking if there's a reasonable fib level above 23.6, and the answer is not that I know of. Never heard of anything. No. Although, has anyone heard of, now that I think about it, has anyone heard of the, does it exist, .014? That sounds somehow familiar, but I'm not sure. Does anyone recognize that? Somehow it rings a bell, but not sure about that. Isn't that a target maybe some people use? I don't use it though in any case. In any case, because we are approaching that resistance, you get more choppiness. That's what happens with the trend meeting resistance, or a downtrend, of course, meeting support. Anyhow, you probably know that from 1 hour perspective. Anything new here? Of course, the dollar yen also very susceptible. How do you say it? Susceptible? No, vulnerable is the better word for me, to movements during FOMC as well, of course. Yeah, I'm not sure either way for if it's a fib level or just a percentage retracement indeed. Yes, that's the word I mean. Success. I can't say it. Horrible. Got the cat caught my tongue. Apparently, horrible. I won't try it again. I'll just fail miserably. Susceptible. Ah, thank you. that C totally the S and the C made it too difficult even for me. Susceptible. Thank you. That helped a lot. Let's take a look at the Aussie otherwise I think people maybe get bored with the dollar yen. Aussie, same story though. I don't want to be old record here, but here too, downtrend but approaching support. So here too a trend approaching key levels. Aussie also making a correction of a chart pattern. This one is more looking like a bear flag than a triangle. Here too though, a trend continuation likely. Actually, the support level of the Aussie is a bit further away. It's at 88.50. So there's still definitely some space to fall before we bump into that bigger monthly support level. Let's take a look at the 1 hour chart. So with 88.50 as the monthly support and target of the downside trend here at the moment, of course price could break through that bottom, I'm not saying, but usually speaking price would bounce around that level, either a bit below or a bit above that or right at it for some retracement before it might continue down. If it does break though eventually, if 88.50 does break, then 85 would be the most likely target after that, with some ups and downs of course down to 85. So for the moment though, we have a trade down to 885, and a pattern like that would aid that perspective. First of all, we have a downtrend, we have an impulse, and we have a corrective bear flag to the upside. So all is in play here for a continuation to the downside. Will it happen immediately? It doesn't have to. We could retrace, we could spike up, retrace to 61.8, up to the moving averages, find resistance there, and then move down. That sometimes happens. Or if we break the bottom of this bear flag, there's a potential to fall immediately without retracing deeper and higher. This particular bear flag break to the downside somehow doesn't entice me and appeal to me that much. First of all, the bear flag is quite, the shallowness is something that's always a bit difficult because once you break, you bump into support here right away. Also, the moment where it could break might be FOMC or a very low liquidity period during holiday season, which of course is not really that appealing, but in a way I would rather have it go higher and sell it from there than go lower and sell it there. But of course the trading in general definitely more difficult and different in the second half of December, definitely. And I personally scaled down the number of opportunities that I trade substantially. So in the second part. But I do monitor the Forex market, of course, even though I take less trades, a lot less trades, and most of the time none at all during Christmas. I think never probably, but I'm not 100% sure. Because I want to stay in the rhythm, of course, for January, right? So that's always good to do. There's nothing wrong, unless of course you have a planned holiday. I'm not saying that no one should take a holiday, but I mean if you're not on a holiday, there's nothing wrong with keeping an eye on the Forex market in the meantime. and have a great time with the holidays, of course, as well, right? But anyhow, now I'm blabbing along. From a technical point of view, 61.8, all these fibs, potential retracements, and bouncing spots for downside continuation. $91.50 also are these daily tops right in here. That itself would be the very, very max, but I don't think it would get that high because we have a downtrend channel, this blue downtrend channel. We have the bottoms here indicated by the purple line. So the likelihood of price going even above those levels, I think, is not too high at the moment, at least. We also have the 50 fib itself could already be a bouncing spot, in fact, together with the minus 618 target. That confluence there could be already enough to send it lower. Good. Let's take a look at the CCI. Daily chart had a very strong spike down with the CCI, indicating some acceleration, I would say, of the trend. At the moment, there's no divergence as far as I see. You can see that all these bottoms are actually moving down, lower, lower. So continuation of that downside, therefore, also seems likely. And the weekly chart showing a push into or below the minus 100. So Veshna is saying, Aussie rumors, we will be looking pretty handsome with 0.8. Yeah, 0.8 would be nice. If we put a fib on this downside like this, we can see that the targets, where are the targets? This was an impulse here. This could be a correction back to the 50 fib. Targets at 84 and 79. That's where she or he can go, depending how you look at the Aussie. So, or it can go. We still have one more support level though, right at 88.50. Is there any particular oscillator that you would like to see? Maybe you have a certain oscillator you want to share with me. I'll be interested in that. I primarily look at the awesome oscillators, you know, and the awesome oscillator, from the awesome oscillator perspective, this break of this 4-hour support was important, indicating the break to the downside. In fact, that trade worked out well. At the moment, though, the oscillator hasn't returned to the zero line. So for a new AO strategy to set up, this would have to go back to the zero line. 50-minute world, very choppy. Not easy to trade this as a breakout trader. It could be easier to be a bounce trader here and trading this range instead, up and down, if you like that type of trading. Not always perfect though, as we can see here. It failed to move up, and here, and here, and here. So it sometimes seems easier than it is. But in general, there are some ups and downs here, though. Anyhow, that's for 50-minute chart. I got some questions on the AO. That sounds good to me. Let me take a look at those. So the importance of the AO returning to the zero line means that basically that particular correction has met its minimum correction of that time frame. What does that mean? Basically, if we for example look at this downside here, when this is returned to the zero line, that particular downside is one swing high, swing low. First of all, that move belongs to each other. It's one leg. It's one swing high, swing low, from the zero line to zero line. So from here to here, we know that this is one move down. From an Elliott wave perspective, therefore, we know that that is one particular wave. That could be, and in this case, it's looking like an impulse. So that's an impulse wave, right? Whatever the count is depends on the other waves prior, the other moves and swing highs, swing lows prior to that, and how we label those, which I won't go into because it's a wave. That's the Elliott wave theme. Just trying to explain that this particular move is a one swing high, swing low, and one particular wave within the wave count. So with that said, when the currency goes back to the zero line, that means the minimum retracement has been met. If we expect more continuation, then eventually this oscillator will get to the zero line, and once it has hit the zero line, this correction has corrected the minimum size correction that we can expect, and we could see maybe continuation of the trend. All right. So it helps with a few things. It helps with direction. It helps with momentum, because this is a very strong momentum reading. If it has a very strong momentum reading, that means the likelihood of that bottom being broken is high to get at least, at minimum, one-time divergence. It also helps with reading those divergences, because when we had divergence here between these bottoms, as we can see, lower high, lower low, but not a lower low here, a lower high here. We had divergence, and where does the currency then try to get back to? Not always it does, is the long-term moving averages, and after some ups and downs, it finally did, right there, before then finally, then again, continued with the downtrend. So it helps with momentum, trend identification, Elliott wave counts, divergence, identifying swing highs, swing lows, therefore also being able to place fibs on those swing highs, swing lows. And the zero line itself is to understand what the minimum retracement is on that chart. Now, of course, the funny thing is with multiple time frame analysis is that if we were to zoom in to this particular area of the 1 hour chart and zoom into the 50-minute chart, what is one down move on the AO on the 1 hour chart will have its ups and downs on the 15. Let's take a look. Look, we have here, first of all, we have a move back to the AO here. We have it here. And we have it here and here. That means we went back 4 times to the AO within the 1 hour world, which means that we had 4 swing highs, swing lows to the downside, right? And a couple to the upside, also 4 probably, within the 1 hour down move. So if we then look to the 15-minute chart more intensively, we can see that this was a very big expansion after the zero line hit, and then another continuation after the zero line hit. And then another expansion, but this one didn't go too far before we made a bigger retrace. And then still downside kicked in because of the 1 hour world that was in a big downtrend. So in this case, the 50-minute world, this was one downside, this was correction. This was downside, this was correction. This was downside, this was correction. This was downside, etc. If we then zoom into the 50-minute world and look at these swing highs, swing lows, what you'll probably see on this particular move, or all the moves, is you'll have, of course, swing highs, swing lows in the 5-minute world. You could have 4 of those within this one 15-minute world, for example. And that's how all these things piece together. And one of my AO strategies is by looking at the 4-hour chart, looking for a very strong AO reading and waiting for the AO to go back to the zero line, then taking the next 4-hour fractal break, going for a 1-to-1, 2-to-1, or 3-to-1. Very simple strategy. And in that regard, indeed, WAFO, you could just trade using this AO with the trend filter. Indeed. Maybe this particular strategy could be useful on other time frames as well, but I like the 4-hour because the 4-hour AO is sturdy, it's strong, and but maybe a bit more whipsaws potentially on the 1-hour chart. Also, the daily chart, of course, is a very high time frame, so I like the 4-hour world. Although I'm sure that if you time your entries correctly, it could be also useful on 1-hour world. The only thing one has to be careful of is not to trade maybe with too many divergences on the 1-hour chart. But I've never tested that. So those particular statistics were valid of the backtest data that I did on the 4-hour world. So I hope that makes sense regarding the oscillator. If any follow-up questions, let me know, of course. Here you can see with this downside, for example, that this particular, where I have the pink lines, magenta lines, that was the 1-hour downside, right? The one move on the 1-hour world, but on the 4-hour world, we can see it's just part of the move down, right? The part of that move down goes all the way down to here, right? So actually, from the 4-hour perspective, this is the swing high, swing low. And that 1-hour world move down where I have green was just part of it. If you look at the 4-hour oscillator, in fact, this was a move down, this was correction. This was a move down, this was correction. Then we had again a move down, correction, down, and those are all swing high, swing lows. All these red and green lines that I drew. No, I haven't tested it on timeless charts. Would be an interesting idea, in fact. Let me write that down. Alrighty. Kiwi is quite choppy. It remains choppy. Once chop starts, you never know when it can end. It could continue for longer than we think, in fact. This has been a very choppy move and has remained like that. as we can see. Maybe some kind of channel to the downside, potentially, but otherwise not a real interesting look at the moving averages, very caught within each other, and when they go flat like this and they're on top of each other, that means there's no direction, and this is a range environment, and any move up or down will probably encounter support or resistance, I would say, or there's a good chance, depending, of course, when such a thing were to happen. Let's take a look at dollar CAD. Dollar CAD made a bit of a downside here. It looked also like a falling wedge. Got a spike out of that. Then went down again. Not really too interesting at the moment for me, dollar CAD. Just waiting and looking. It could be a trend line like that to get an idea when this uptrend that we had on this CAD, and now I'm even rhyming. Wow, I am a poet a bit. No, I'm just kidding. We can see the break potential there to the upside, but it's all very choppy. Dollar CAD, dollar Swiss, excuse me, going into very low territory, breaking even this support. Let's take a look at the CCI here. Maybe we are in an oversold position. Is there divergence, for example? Those kind of questions we might want to take a look at. Let's take a look at the daily. Daily CCI actually had a pretty strong reading the last time it went down here in December compared to October. Yeah, that was pretty no divergence there, in fact. So let's take a look at, let's take a look at the weekly. Not too fond of the Swissy at the moment. The Swissy itself really not moving too much. It's quite the consolidating phase. Let's take a look at something else, maybe like the pound yen. Before we do that, though, let's take a quick look at Euro Swissy. Euro Swissy waveful is saying broke out of a triangle, and it certainly did indeed. The entire move relatively very flat, though, of course, on the weekly chart / choppy. The daily chart did push through the triangle indeed, and the support, and even has some kind of a trend channel, maybe one could see, like this. Yeah, 122 is a big level. Even bigger level, it would be, of course, right here, 120. Anywhere down there, most likely support. Let's take a look at the pound yen. Pound yen, very nice uptrend channel, and we got the push up, but now, of course, stalling a bit. Logically, eventually it has to. Daily chart is retracing to the zero line here, slowly but surely. So maybe one more push up and then a full retrace to the zero line could happen. We already have a single divergence, but we could get a double divergence before we maybe move back down to the long-term moving average. So something like this might happen. But we might also move down immediately, in fact, because there is even though it's only one divergence, there is a divergence, so there's always the possibility to go back to the long-term moving average and the -618 target at 165 and this bottom. So that would be a very nice triple confluence at 165. How do we know that we're going to 165? I would say we have to keep an eye on, at the moment, this bottom. The fact that we went up here but failed to continue and move down again, also aiding the fact that we can go to 165. 1 hour chart. Strong impulses to the downside. This is very corrective triangle at the moment. A break of that particular triangle could see nice continuation to that 166, 165 level. A break outside of that triangle to the upside could see some upside continuation, but maybe we'll find resistance at these retracement fibs back down to that level. That's something we have to be aware of that particular danger. However, once we do move to 165, this is still a huge impulse, and it would only be a retracement, most likely, for more upside. So what we're looking at is a retracement, in fact, on the daily back to support for more upside. Most likely. That's what I think. And it's just a massive trend, so I don't think there's necessarily as yet anything to suspect that this would change right here. I do think that we want to see at least daily divergence probably before something like that happens. The Euro-Yen could be something similar, in fact. They look, structure-wise, it looks very similar to Pound-Yen. Divergence here on a 1 hour chart already has had its effect, right? It already had it reached its target, let me say it this way, of going back to the long-term moving average, but we also have divergence on the 4 hour chart, which means that we could even go back to the bottom of, the moving average on the 4 hour world, which would be way at 139, and these bottoms here. For that to happen, though, price would definitely need to clearly close below 141 before we have that potential to retrace down to 139. Euro odd is making a chart pattern here of some sort. Looks like a triangle-ish formation. A break to the upside, obviously with the trend. A break to the downside. We should find support at the fibs. If we just put the fib on this recent up move, any downside should find a support 382 or 50 or 618. Any of these should send it back up again in this uptrend. I don't see necessarily anything that would stop the trend from materializing right now from continuing. If you put a fib on this upside, the target, in fact, at 157.40, we haven't reached there at the moment, so there's still some space to the upside here. If we break or first retrace, you can see that this 150 was a previous top. That level could become a support if we move down, right? We can move down, bounce off that level, and continue for more upside as a break, pullback, continuation setup. Break of the resistance, pull back to the same resistance, use it as support, and continue up to the minus 272. That's something that could happen, but will most likely happen only, of course, if, sorry about that, yikes. I don't know what happened. Do you still hear me, first of all? I pressed the wrong button and the chart disappeared. Quite awkward again. Yeah. I don't know what I pressed. Yeah, that's the problem is I also only see blue screen. That's strange thing about it. A bit weird. Ah. Well, I think that we're going to have to stop right here because I think I'll probably have to reboot again now because I pressed the wrong button somehow and I can't retrieve the MT4 of Admiral Markets here. I click on it, but it's not popping up. So, well, anyhow, it's close to finishing. I hope to, I'll remember these settings and shouldn't be a problem tomorrow, hopefully, with regard to the screen. And I know what particular setup did the trick, and at least you could see the chart. So I'll write that down and have that ready for tomorrow. In the meantime, I thanks everyone for here. The last thing I wanted to say about the Euro-AUD was just that it could hook back basically to the broken resistance and bounce from there, or a higher fib, right? It would be classical break, pullback, continue, maybe up to the 157. And the pound-AUD could be a bit different, I wanted to say as well, because it has already reached this minus 272 target, so something to be aware of. But the Euro-AUD hasn't reached that, so I would say there's some space there for that trend to continue, even if it were to move down first. Okay, if it breaks 150, of course, then we'll have to rethink it and reanalyze it, and maybe something else is going on. So just wanted to add that as the very last stuff for today. I will ask the tech guys indeed, although I will have to probably ask GoToWebinar what could be. I'll try to find out with GoToWebinar what's going on, but because it's not Admiral Markets. But in any case, if they don't get back to me by tomorrow, I know how to at least show the charts, at least that. All right, folks, wish you all great trading, and hope to see you soon. Cheers.